Alan, some U.S. expats who are living overseas, maybe especially if they're working for foreign companies, they might be eligible for foreign pensions. How do those impact U.S. tax obligations?
When it comes to foreign pensions and retirement plans, there's a lot of gray areas. So it's really hard to say exactly what you should do and exactly how it should be done. When it comes to foreign pensions or retirements for tax purposes, there's three different elements that you really need to look at. So the first element is the contributions that you make. The second element is the annual income that those plans generate. And the third element is what happens when you take money out. But by and large, whenever you make a contribution, you normally get to be able to take a deduction on your tax return within that foreign country, but you are not allowed to take the deduction on your US tax return. For the income that's generated, you have to include that as current income on your US tax return. And that can cause a lot of trouble, especially if you've had a retirement plan for 20 or 30 years or so and you've been contributing to that. So that's another issue that you need to closely look at. All the dividends, the interest, the capital gains, and etc. The last part is when you start taking money out of that retirement plan. So generally when you do that, you might not be taxed, or you might not be taxed on the entire amount that you take out by that country where you earn that pension. And the same goes for the United States. That's where it really comes down to keeping carefully detailed records that reflect how much you contributed, how much your employer contributed, what the earnings are. Because when you take that out, if any of that money, if you can allocate part of your own contributions or part of your employer contributions to that part won't be taxable. The remainder will be. So it might be that only the portion that relates to the investment income earned by that pension would be taxable for US tax purposes. But you really have to keep those records over quite a period of time.
When an expat is reporting on their taxes for these foreign pensions and everything, what forms might they be required to file?
Well, a lot of the income will wind up on their Form 1040. And also for their employer contributions. They might not be taxed on that locally, but that adds to their income. Hopefully they'll be able to reduce that by the foreign earned income exclusion, the foreign tax credit, or both. But there are some particular forms that might need to be filed regarding these foreign pensions. It depends a lot on how they're set up. They might be considered foreign trusts. And if that's the case, you might need to file the foreign trust reports, which are forms 3520 and 3520A. You're probably gonna almost certainly have to file an FBAR. Similarly, you have to report those as well, typically on a FATCA report. So in this area, I really highly recommend that expats book a consultation with us or work with us to help prepare their tax returns to make sure everything is done correctly. Because if you don't file some of these forms that I mentioned, you could be subject to a $10,000 penalty per year or more for each and every one of those forms that you may need.